Hello, everyone. This is David Hrizak, CEO of the Streamline companies. We're back in our educational series of learning how to invest with a self-directed IRA. And today I'm joined by Mark Peck from Directed IRA. Welcome, Mark.
Hey, David, thanks for having me. Great to be here with you.
Well, thank you for taking the time to talk about Directed IRA and your services. So, Mark, Streamline Capital Group is a private real estate company, and we work with a lot of limited partners that invest in our private syndication deals. A lot of our clients have IRAs, but they didn't know that they could create a self-directed IRA to diversify their portfolio and invest in our real estate opportunities. When a client chooses to invest with us and they truly understand what a self-directed IRA is, how do they go about creating an account with Directed IRA for legal purposes to invest with us?
Yeah, great question. And a large part of our role is helping educate and assist folks throughout the process. For most people, it is a newer thing for them. They probably haven't used a self-directed retirement account before. So we want to make it easy and approachable and work alongside your team in partnership to help make it, just efficient and simple. So just a little bit about us, as David mentioned, Directed IRA. We're pleased to be led by Matt Sorensen, our co-founder and CEO. He's a tax attorney by trade and has decades of experience in these types of accounts. We serve over 23,000 clients and are always excited to meet and get to know new folks so we can help begin this journey into self-directing. Quick disclaimer, we always encourage you to work with your professionals, whether it's a financial advisor, CPA, attorney, to review any deals before you invest. And so back to this idea of the self-directed, right? And how do you actually logistically make it function, right? The idea of the self-directed IRA is it's a retirement account owned and set up like any other. So it plays by the same IRS rules, the same Department of Labor rules that govern all retirement accounts. The most popular type is a self-directed IRA. As David mentioned, that's where most people are going to land ultimately. There's a few other flavors, but self-directed IRAs are the thing we see the most of and the account type that we serve the most of. Probably 90% of our clients use these accounts. You're usually going to get introduced to somebody like us because you can't use your large traditional provider, a Schwab, a Fidelity, and Merrill Lynch. They don't serve these types of private investments in self-directed accounts, and that's where somebody like Directed comes in. So the power of it is being able to put it to work, for your friends and family. And back to like, where do you begin the actual logistical process? And what are you thinking through when you get to this stage, right? So if you're creating your first account, you're creating your self-directed account, there's really two common account types. There's the traditional IRA, which are pre-tax dollars. Contributions go in there and they reduce your current year taxes. A lot of folks will have experienced this through a 401k. If they contribute through work and their employer, matches, a lot of times you're doing that pre-tax. So it reduces your taxes in the current year. And it goes in tax deferred, though when the dollars come out, you do pay taxes on them. So it stays in there deferred. So it's important to understand that as you get older, the IRS is going to force you to start to take those dollars out. And when you take the money out in a distribution, you're going to pay taxes on it then. So essentially, instead of paying taxes today, you're deferring that decades down the road for some folks. When they get to 73, the IRS is going to make you start taking money out. You're eligible to take money out after 59 and a half. So sort of that 60-year-old retirement age is where you can begin to take it out voluntarily. But as you get older, the IRS will make you start to take it out at age 73, which is a big difference from the second popular account type, which is a Roth IRA. Roth IRAs are after tax. So the dollars have already been taxed, then they've been contributed, and they're growing and again deferred, but they're going to come out tax free as long as you wait 5 years and 59 and a half. There are no required minimum distributions here, which is a really big difference. So that means as you get older, you don't have to take the funds out. Let's say you had ample savings in your personal account and you didn't want to take the money out yet. When you're 73, you don't have to. The Roth allows you to keep building that. And what is so appealing about the Roth, and you think about, a deal with the Streamline company and maybe something with potential great growth opportunities. When you capture that income, when you capture that growth back into the account, it's going to rest in there tax free. And so when you take it out at age 60, you're not paying any taxes on it. So that's the key difference between that and a traditional IRA. Last thing I'll just say there for the Roth IRAs, there are some income limits on how much money you can put in. If you make a lot of money, they make it harder for you to put dollars in. There are some strategies for that, but there are some income limits. So those are the key differences between traditional and Roths. I don't know, David, do you get many questions like that when folks are interested in talking to your team?
Yes, we do, because a lot of people have never even heard of a self-directed IRA. They've contributed to a system for 25, 30 years. They retire, they have this IRA. They're Schwab, they're Edward Jones, they're Fidelity advisor. Doesn't put their money into a private real estate deal like ours. They keep it into the stock and equities market. And there's over $35 trillion locked up in that right now that are missing opportunities of private real estate opportunities like ours. The stock market is a roller coaster. Everyone sees the Dow Jones up, the Dow Jones down, your IRA shrinking, your IRA growing. Well, what we advise people to do and recommend, take some earnings off the table from your IRA, put it into a self-directed IRA so that you can control where it's going away from the equities market and have the opportunity that has really been reserved for the upper echelon of high net worth individuals over the years. Private real estate deals are not offered on the marketplace in the equities world. They're only offered to people that have private money to put into them. So utilizing a traditional IRA set up through directed IRA is a great way to diversify your portfolio, grow your portfolio in opportunities that are not afforded to you in typical situations.
Yeah, it can be incredibly powerful. And just know that there's a lot of different choices. A big part of our job is helping folks understand what they have and what their options are. When it comes to the pricing, you're going to experience a different cost structure with using a provider like us. We don't make money selling investments and we don't make money as advisors, right? A different experience than you might have had in a 401k plan or with your wealth manager. They're making money on what they're advising and then the securities they buy and sell. We're here to act as a service provider to help you invest in a deal like David's Streamline opportunities. And so we make money directly at the account level. We're getting paid from the account holder. There's no contractual relationship between us with any of the investments that you make. We're not paid to sell investments or recommend them. We're just here to facilitate that based on your own selections, and that's self-directing. So for us, we try to keep the fees pretty simple. We charge a $50 one-time account establishment fee, so that's $50, 50. Same cost per alternative investment. So let's say you've lined up a deal you're interested with the Streamline Group. You're going to make that first investment. We're going to charge you $50 to open the account and then $50 one time to make that investment. If a few months down the road you want to make another investment and get into another opportunity with David's group, that's going to be a separate one-time $50 charge. We lay that on top of a annual account fee. That's the basis of our structure and our servicing. We don't charge basis points or valuation fluctuated fees. It's just a flat annual fee. Our retail price starts at $495 a year. We're happy and pleased to provide a preferred fee price for the Streamline Group down to $395. So that $100 off is a good, meaningful recurring discount that will be applied throughout the life of the account. So we've got an example on the screen here of a first year fee, looking at around $500 for that first year, depending on activity. And then if you're just set it and forget it in that first investment, which is common for a lot of folks, in year two, you're just going to pay the flat annual fee. So if you have more activity, you'll pay a little bit more. If you are more passive and just hold the one investment, it will be a pretty set it and forget it cost structure.
And with our investments, we'll make sure that the $50 that you are paying for these fees are well compensated with greater returns than just that. So it's just a small cost of doing business like any transaction in the workplace.
Love it.
So, Mark, what we do at the Streamline companies is we streamline things. We try and make it easier for everybody involved because the easier it is, the more people like it, the more people will recommend it. So, at the Streamline companies, each of our investors and potential investors have access to our portal system to create their own account. Within our portal system, everyone will find a link to Directed IRA to create an account with Mark and his team if you have not already. If you've done so, great. All of our subscription process is done online with a electronic signature document format. Once you have the directed IRA system set up in place, we make it easy to get that investment dollars into one of our streamline opportunities. And Mark, how long would you say it takes to set up a self-directed IRA?
A good question, and timing is critical, right? You always want to move as fast as possible, but with retirement accounts, there can be some structures and some industry challenges that kind of can slow things down a little bit. And so for us, we try to make it again as streamlined as possible. And so for the account opening, that part's pretty easy. And again, as David mentioned, we try to make it an online experience. We do have more, paper-based choices for folks who might prefer that. But for most clients, they're coming through our website. They can create an account in just a few minutes. You're giving us information to essentially open a bank account, right? It's your name, it's your date of birth, it's your address, critical personal information. That will get your traditional IRA open and ready. That just takes, less than one day. A few minutes online, and we'll have the account verified and set up, and you'll have your account number back within 24 hours. The next step can be the big variable for folks, which is just funding that new IRA. So if you're rolling money over from an old 401k, let's say, those can unfortunately be a little cumbersome sometimes. Let's say it's coming from that 401k or maybe a government plan, or if you worked in education, you've got, a non-private sector plan, a public sector plan. Oftentimes they're going to want to mail a check out. They might even require you to send in like a paper-based form. So that can be the tricky part. That's where Directed comes in. We want to help make that easy for you. This is usually not something that people do commonly, so they're not very familiar with it. A big part of our job is helping you understand how you're going to fund it and then getting that kicked off. A little bit faster than the rollover is an IRA to IRA transfer. The good news with those is they're very predictable and they move in just a few business days. That's where most of our fundings come from. So if you've got another IRA, let's say at Charles Schwab, you can transfer money over. There's nothing reportable about that. There's no taxable event. And the money comes to us bank to bank in typically 3 to 5 business days. So that one's pretty repeatable and consistent. It's those rollovers that can be a little tricky. The transfers are more steady. And the last option is a contribution. That's new dollars going in. So if you want to put new money into your account with us, there are some limits on that. It's $7,000, $8,000 a year, depending upon your age. So it's not a huge amount, but certainly can be meaningful and add, a nice bit to what you already have. The contributions are pretty easy. We use, online banking systems that help you put dollars into our accounts in just a few days. So, you're welcome to send a wire, or if you like writing checks, you can do that too. Most people try to avoid that these days. So just a couple of days to get money in. And the last step is really getting the investment made, right? And that's where we work with David's team in the online process that they have to get those investment documents lined up. We're making sure that the IRA's information is listed as the account owner. That's a really critical portion. And a big part of that is like the account owner's name. We're going to add the IRA section in there, the tax ID that's used. It's not just the social security number of the investor, it's the IRA's tax ID. And those critical, small but important details are sprinkled in throughout the investment documents. So we work on the back end with David's group to kind of have all that pre-filled and set up for you, and have it make it easy to click through there. So really, you've got three deliverables: get it open, get it funded, and get it invested. And that final stage, we work closely with David's group to make it very simple and have all the paperwork lined up for you.
So for everybody listening out there, the reason we've chosen to work with Directed IRA is because they streamline the process just like we do here at the Streamline companies. Our online portal system can be accessed in just minutes, documents reviewed and signed. But if you are choosing to sign up and invest with a self-directed IRA, we will make it easy for you to get in touch with Mark and his team at Directed IRA through a secure link in our portal system. Even on our website, there is some information about Directed IRA, so you can talk to them prior to making the decision to invest in Streamline with your self-directed IRA. And as we always say, diversify your portfolio, get out of the stock market roller coaster ride, and diversify your way to long-term wealth. Mark, I appreciate your time today. Anything else you'd like to add?
Well, thanks. I think we covered it well, David. Again, we want to leave people with this, concept that they can do this. It's approachable. We work together to make it easy. We're excited to create a powerful combination for them with real hard assets that are providing real world returns and directed IRA's simple self-directed process. We're here to help answer questions, and we'll also work closely with the Streamline team just to make it a really, a positive experience that goes quickly and efficiently for you. Again, my name is Mark Peck. If you've got any questions, this is my email. Happy to help. And the team has contact information. And if you ever do choose to work with us, we're excited to welcome you. Make sure you add the referral code Streamline to get that preferred pricing.
Mark, thank you very much for your time today. I appreciate it. And for everybody out there listening, if you have any further questions, please reach out to myself, David Hrizak, CEO of the Streamline Companies. I'd be happy to answer your questions and refer you over to Directed IRA for any technical advice that they would have with setting your account up. Thank you very much, Mark. Have a great day.
Everybody.